What's up everybody and welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and in today's video I'm going to share with you guys 5 dividend stocks that all have ex-dividend dates of this coming week.
This week, huh?
Yeah, is this week bad for you?
What makes these stocks interesting is all of these stocks have outperformed the S&P 500 over a long period of time. They all have very low payout ratios and very high dividend growth rates. So if any of that sounds interesting to you, let's go ahead and jump right in with number 5, Churchill Downs, stock ticker CHDN. Now I'm very excited to bring this stock to you guys because this is the first time I'm mentioning this stock right here in the channel. So let's go ahead and dive into the numbers behind this stock. Churchill Downs is an annual payer in the consumer discretionary sector, paying 41 cents per share per year with a forward dividend yield of 0.29%. Churchill Downs has been paying and growing this dividend over the last 14 years. They have a 3-year dividend growth rate of 7.1%. A 5-year dividend growth rate of 7.06%, and a payout ratio of just 5.9%. Now, at the time of recording, Churchill Downs was trading 5.55% off of their 52-week high. They have an ex-dividend date of December 6th with a payout date of next year at January 3rd. And looking at this chart, you're going to be able to see the growth of a $10,000 investment while only reinvesting dividends since then into this company versus the S&P 500. Churchill Downs would have turned that $10,000 into $92,224.30, which outperformed the S&P 500 by $57,935.16. The only reason this one wasn't higher on this week's list is because those dividend growth rates are a little bit lower than I like to see. Next up, and coming in at number 4, is Old Dominion Freight Line, stock ticker ODFL. Today's video marks the 8th time I've mentioned this stock right here on the channel, and if you go all the way back to the very first time I spoke about it, which was February 24th of 2023, Old Dominion Freight Line is actually underperforming the S&P 500, but I'm not worried about that long term, and I want to show you why. ODFL is a quarterly payer in the industrial sector, paying $1.04 per share per year with a forward dividend yield of 0.47%. ODFL has been paying and growing this dividend over the last 8 years. They have a 3-year dividend growth rate of 37.75%, a 5-year dividend growth rate of 35.66%, and it's all sustainable because the payout ratio is just 17.13%. Now, at the time of recording, Old Dominion Freight Line was trading 5.58% off of their 52-week high. They have an ex-dividend date of December 4th with a payout date of December 18th. And looking at this chart, you can see that $10,000 investment while only reinvesting dividends would have turned ODFL into $85,787.04, which outperforms the S&P 500 by $51,497.90. First up on the podium this week, coming in at number 3, is UFP Industries, stock ticker UFPI. Including today's video, this is now the 6th time I've mentioned this stock right here on the channel, and if you go all the way back to the first time I spoke about this one on May 26th of 2023, UFPI is outperforming the S&P 500 since then, and I want to show you the numbers behind why. UFPI is a quarterly payer in the industrial sector, paying $1.32 per share per year with a forward dividend yield of 0.99%. UFPI has been paying and growing this dividend over the last 12 years. They have a 3-year dividend growth rate of 30.92%, a 5-year dividend growth rate of 27.7%, and a payout ratio that makes that sustainable at just 17.74%. Now, at the time of recording, UFP Industries was only trading 4.63% off of their 52-week high. They have an ex-dividend date of December 2nd with a payout date of December 16th. And looking at this chart, over the past 10 years, that $10,000 investment while only reinvesting dividends would have brought back $89,383.29, which outperforms the S&P 500 by $55,094.15. That was stock number 3, which means we're a little bit over halfway through this week's video. If you guys want to take 1 second to leave a like on the video, I'd really appreciate that. And at the end of the video, I want to hear from you guys whether you like or dislike any stocks in today's video. Let me know in the comments down below. But now let's get to the rest of the list. And I'm very excited to bring this next stock to your guys' attention. Coming in at number 2 on this week's list is Hluhan Low Key, stock ticker HLI. Including today's video, I've now brought this stock to you guys 3 times right here on the channel. And if you go back to the very first time I spoke about it, way back on August 26th of 2022, HLI is crushing the S&P 500 since then, and I want to show you the numbers behind that great performance right here. HLI is a quarterly payer in the financial sector, paying $2.28 per share per year with a forward dividend yield of 1.21%. HLI has been paying and growing their dividend over the last 9 years. They have a 3-year dividend growth rate of 13.8%, a 5-year dividend growth rate of 14.07%, and a payout ratio of 33.27%. Now, at the time of recording, Holuhan low-key was only trading 1.38% off of their 52-week high. They have an ex-dividend date of December 2nd with a payout date of December 15th. And looking at this chart, I want to draw attention quickly down here at the bottom where you can see that this one only has 9.28 years worth of history, but the returns would tell you otherwise. A $10,000 investment into this one just 9.28 years ago would have brought back $102,899.46, which outperforms the S&P 500 by $69,334.91. So the numbers for that last stock were pretty good, but it only came in at number 2, which means there is one more stock that I like more than that one. Coming in at number 1 is Lind, stock ticker LIN. Including today's video, I've now mentioned this stock 10 times right here on the channel. And if you go all the way back to the very first time I spoke about it on August 26th of 2022, Lind is outperforming the S&P 500, and I want to show you the numbers on why this one is my number 1 pick this week. Lind is a quarterly payer in the materials sector, paying $5.56 per share per year with a forward dividend yield of 1.22%. Lind has been paying and growing their dividend over the last 31 years. They have a 3-year dividend growth rate of 9.54%, a 5-year dividend growth rate of 9.56%, and a payout ratio of 32.75%. Now, at the time of recording, Lind was actually trading 6.71% off of its 52-week high. It has an ex-dividend date of December 3rd with a payout date of December 17th. And looking at this chart, we're back to a 10-year time frame. Lind would have turned that $10,000 over the past 10 years into $209,120.01, which outperforms the S&P 500 by a kind of noticeable $174,830.87. Honestly, if I'm gonna nitpick, the only things I don't absolutely love about this stock is the dividend growth rate is a little bit lower than I like, and the payout ratio is a little bit higher than I like, but other than that, this stock is a home run.
Home run!
Ooh!
Now, if you guys happen to be watching this video after December 2nd of 2024, it's kind of important to make sure you're subscribed because I release these videos when I do, which is Friday at 8 a.m. Central Standard Time, so you guys can watch them as soon as they come out. And if any of these stocks tickle your fancy, you guys can push the buy button on these stocks and get paid by the next dividend. So if you guys happen to miss that deadline, you might have just missed that dividend, which means you now need to wait at least 3 long months. Keep in mind, one of these stocks was even an annual payer, and we all know
Ain't nobody got time for that.
With that being said, you did already miss the ex-dividend dates from last week's list, but if you're looking for 5 more high-quality dividend stocks, make sure you check that out right here. But until next time, see ya.